The merchant bank or the merchant banking division is an interesting one because most investment banks don't have this division. The good news is it's one of the most attractive divisions to work in. Not many people have heard of it though. It can actually potentially be a better option than going into the investment banking division if you're interested in exit opportunities into hedge funds and private equity. The bad news is it's extremely tough to get into. Probably the hardest division to get into. Why? Well, part of the reason is that the MBD or the merchant banking division is extremely small and they hardly ever recruit any interns or graduates. Typical routes into the merchant bank are through doing a few years in the investment banking division. So what exactly does the merchant bank do? The merchant bank primarily manages private capital. It invests in and creates funds primarily focused on private equity, private debt, real estate equity, real estate debt, and infrastructure. But what does all of that mean exactly? The merchant banking division raises money from the private wealth management clients, the asset management clients, and the sales and trading clients, and it pulls all of that money together and invests it into the funds that it creates. It invests that money into special projects and it does so over a long period of time. So once you invest that money, it's locked up for a good 10 or so years, 10 to 15 years. What are these projects? These projects can include funding infrastructure projects like creating toll roads or bridges all over the globe, or funding real estate projects like building lots of hotels or residential housing, or hundreds of new homes, or even investing in startups and new innovative companies through private equity funds. The idea is investments in the merchant banking division's funds are over a very long period of time. Your money gets locked up, but the return potential is very, very high. So you can expect returns between 15 and 20%. Compare that to a fixed income portfolio or fund of like 2 or 3%. There's a big difference. And you get that premium because you are locking your money up for a very long time, and so you need to be compensated accordingly. The merchant banking division invests over the long run, and so capital or investor money is locked up for at least 10 to 15 years. Reason being is you can't build houses or bridges overnight. It takes a long period of time, and so that's why your money gets locked up for so long. When your money is locked up for so long, it means your capital is illiquid. Illiquid means it's not easily accessible. So if you ever hear that term, liquid means your cash or money is easily accessible. Illiquid means it's not easily accessible. Similar to investing in private equity, the merchant banking division makes its money from a management fee and a performance fee, and the hours are like working in the investment banking division. So you'll be doing 14, 15, 16, 17, 18-hour shifts easily 5 days a week for your first 2 years. But the beauty is the exit opportunities are great, so a lot of people leave the merchant banking division and join a hedge fund or a private equity firm because they've got a lot of transferable skills that are relevant from their previous role.